I'd like to take you on a crime case study of my area of Orlando. So I guess we could kind of turn this into a tale of two cities.
Yes.
And notice this is all of Orange County, or actually almost all of it here. I think it goes all the way out to Apopka, but and through the wildlife areas here is also
Yep.
part of Orange County. So again, good to know what you're looking at. And Orlando is a very weirdly shaped city.
It is. It
And
is.
where I'm going to take you is actually outside of the city proper. And I'll take you to an area where real focus would have told me, now don't invest in this neighborhood because it's not good. I want to say the poverty level was 32%. That's above 20. So that's above the cutoff. So what I would say is, it's a great way if you don't know a market and you get a deal in the neighborhood, go ahead, use the real focus. But when you decide, hey, this is my market, like Orlando is to me, I would say really dig in. You want to know all those neighborhoods so you don't throw something good away.
Right.
And again, if I had only 10 minutes to look at a neighborhood, I would go through real focus. But since this is my market, I'm going really deep. Okay, so you have Orlando, and I want to say it's shaped kind of like a melted horseshoe. I'm trying to outline roughly what it looks like here, very roughly. And I'm sorry, I say I live because I feel like this is my area. This is where I have an apartment here in this census block. And notice, yeah, it's colored as the most dangerous, right? This is not a great area. But take a look up here to the northeast in Holden Heights, things are a good bit better. All the way out here, things are a good bit better. If you go down OBT, if you go north of my area, it's really bad. Even a little bit south, it's bad. But down here, OBT is really great. You can go from Miami all the way to at least, I think, Atlanta on OBT. And it's like any major road. You're going to see nice sections and you're going to see rough sections. So when you really dig into this area, you can see, hey, wait a second. It is kind of a crime area, but look here to the southwest, things are kind of nice. And you actually, if you're going to use Neighborhood Scout, you're going to see that obviously Edgewood and Belle Isle, that's outside of this graph. But you can type in Edgewood, Florida and Belle Isle, Florida, and you can you can continue to dig in and you'll see, hey, these are low crime areas. These are nice areas. And so that's why I would say, if I had 10 minutes, I would just go through real focus. But if it's my neighborhood, if it's
Right.
my market, I want to know everything about it, because the real money, as you were pointing out, Tony, don't just discount an area because it's high crime. You want to dig in because what you really want is the gentrifying areas.
Right. You don't want someone else to be the change if you know that you can. Like if you can come in there and you can make a deal happen at a reasonable price because the crime is high there, the seller a lot of time will see that the crime is high there. So you can use that to your advantage and be the change in that area. So, I would never discount that just because you see darker colors on Neighborhood Scout.
Absolutely. And let's take a look at the crime story in Orlando. And I remember when Neil Bow was originally highlighting the I-4 corridor, he'd say, hey, we're actually above 500, I think 500 or 550. Hey, this is a little bit outside of my metrics, but this is a good area. But look at the trend. I mean, when you keep track of that trend, it's pretty amazing.
Yes.
I mean, it's just coming like right straight down, and boom, now we're under 500. We're doing well. So again, I think you need to have those sort of cutoffs in your mind, but don't use them as an absolute. Look at things like the trends, etc. And another thing for Orlando, I remember, is that there was a huge crime spike in 2005.
Right.
So when you look at things like that, you need to take that into account. So there are a lot of new people moved in 2005, and I read the FBI reports on that. It was attributed to some gangs moving into the area.
Right. Makes sense.
So boom, for a few years, Orlando was high crime. But, you fast forward the police are doing the right thing. They're getting people off the streets, and Orlando is moving in the right direction. So let me tell you, Tony, the only thing I like better than being out there first and being that change for the area is to know that every apartment around us had been repositioned. And our apartment here that's 14 units, it was just too small for the big fish. So they
Yeah.
passed it by and we could see, hey, validated business plan. This area is moving up. Like we got a great apartment out here, right on the corner. It's called Castilian. So it's the corner of this census block and this one right here, which the names are not very for census blocks are usually not very enlightening.
Right.
But this is next to the Park Central area. And it went for $170,000 a unit. We got ours for $60,000 a unit.
Great deal. Great deal. And all because you didn't just listen to what something like Neighborhood Scout tells you. You dug in a little bit more. You saw the opportunity on the front end of it, or on the back end of it. You saw the opportunity there, and you saw what was going on around the MSA to help you have some leading indicators there, and you jumped on it. And that's a great play, George. That's a great play.
Yeah, exactly. And now we don't have a gym and a waterfall and a pool like our neighbors, but we've got a beautiful natural lake. And so I don't think necessarily we're ready to sell at 170 a unit, but boom, coming from 60 and knowing that the neighbors literally kitty corner across the street are selling at 160, it's pretty amazing.
Yeah, absolutely. Let them do the hard work. Let them just bring your values up. You know what I'm saying? Another thing that I was going to say is also don't be careful as you compare, and I want to leave color for our next episode as well, but be careful as you compare MSAs too. Orlando and Greenville are very, very different. They're very, very different. Orlando's economic drivers are very different than Greenville's. I don't know that this is the case today, but there was a time when Orlando may not have survived and be as big as they were if not for the entertainment industry in the city. I mean, just try to imagine what Orlando would be without Disney or Universal. Just imagine what they would be. Now, I think they could survive today, obviously, because of different things that are in Florida. I mean, not everyone that moves here really cares about Disney and Universal, but there was a time when that was the case. Greenville does not have a Disney, a Universal. It does not have, 4 to 5 million people that live in that entire city. So I think we have to be, we analyze MSAs and analyze markets, that we do it objectively. Don't do it subjectively.
Absolutely. And to take that a little further, Orlando used to be all about entertainment, but now this entire I-4 corridor from Orlando all the way out to the Space Coast has a lot of technology, and it's really becoming known for artificial intelligence. Some of that is driven by the Space Coast itself, right? People like Elon Musk and by our government, and some of it is being driven, maybe by the military. But again, there's all these drivers, and it's not just one, right? That's very important to remember. It's not like Houston was, say, 20 years ago, where if there's an oil glut, all of a sudden, watch out.
Yes, exactly. We've got a lot of different economic drivers in the entire state down here. I mean, tourism is always high, but now the Space Coast is doing incredible things over there. Orlando has a financial district. They have the entertainment district. They have, just a plethora of different economic drivers that keep this city booming and sustainable.
Yeah, that's awesome. And then I'd like to look quickly at demographics. This is just going to highlight how things have changed. I love this graph because it shows you citywide, and it shows you how things have changed, which areas are increasing in terms of income and which ones are decreasing. Another really amazing thing to go through. And again, some of this you can get from city data, but the one thing you can't get from city data, the crime map is all the same color on city data. So you get literally no color for this neighborhood versus that neighborhood.
Right.
It's not going to give you any of that. Well, let's see. I think that we're running a little longer than I kind of expected, but if you want, I could go through some Google Maps. And I know, Tony, you're also great on the technological end. So maybe in future weeks, you can show us a little bit about what you've been doing. But
Yeah.
what I want to do is when I go to Orlando, I don't just care about what's a decent neighborhood, what's gentrifying, because
Yep.
we got neighborhoods like the 33rd Industrial District that have supposedly, if the census is to be trusted, one resident. So somebody has a liquor store and they live up above it or something. And
Yeah,
that is not a place where I'm going to find an apartment.
I agree.
So I wanted to map out all of the Orlando apartments with 10 units or more. I'll just take you through very briefly how I did that. So I'm going to go to the Oakland County property assessor, and it's going to be different for every city. So unless you're completely interested in Orlando, I'm going to try and make this really quick. You're going to go to the advanced searches and you want to go to commercial use search, and then you have to choose your property type. And we're going to want to say multifamily first.
Yep.
And I think all commercial real estate is just fascinating as an asset class, but I am focused on multifamily here. And what you got to do is you got to spend a little time with the data. So multifamily 1 is going to be smaller than multifamily 2. Then you got
Right.
student mid-rise, obviously high rise is going to be pretty huge. And they've also got 10 to 49. So it's really kind of weird how they have this grouping, because I swear that these multifamily 1s can have quite a few units. So you're going to pull all that data, and then boom, what do you do? Oh, you know what? I had to close it so I could actually load it up. But what you've got to do is you've got to figure out all of the duplicates, because you'll get individual units listed through this.
Right. So what you're doing is you're going, are you looking for assets that have 2 to 70 units? Is that what you're doing?
Yeah, I'm trying to start with 10 just because that's their designation. I wouldn't mind 5 to 9, but they don't have that designation there. So
Right.
they're starting at 10. So
Okay.
that's fine if that's the way they want to play. And if you look at the raw data, you look at something like this, it's like, wow, this has 10 units, but it only has 3 beds and 2 baths. Well, that's a little odd. So you notice, hey, it looks like there's a very similar address for all of these. And so what I do is, I aggregated it up. I look at the name of the property, right? And if they all have the same name, if it's all Avery Park Villas, for example,
Yep.
then boom, lasso all those beds, all those baths, and figure out how big that is. And then you notice there's a lot of public housing. So I get rid of that, and I finally get to this, and boom, now I'm ready to plot it. And I'll show you how to do that. I think this is really the exciting part, because if you're not interested in Orlando, but you're interested in doing this, so what you want to do is you want to go to mymaps.google.com. Okay. And then you're going to get a new map. You can either visually head into Orlando, or you can search for it. And what you got to do, you can search for it right here. So you put Orlando right there. So what I want to call this is multifamily 1 Orlando. And I'm going to say this has roughly 10 to 75 units. I may refine that as I go further. And notice they don't tell you the number of units in Orlando. You can have to infer that. So obviously you have to have 1 bathroom per unit. So if it's 50 bathrooms, it can't be more than 50 units, and it's probably less.
And that's it. And really quick, if I may interrupt you,
Sure.
George, that is one thing that we see, especially, it's not just Orlando. You see it in Tampa also, is that sometimes when you go look at the tax records, especially if you have like a garden style or definitely an apartment complex that has split facilities, a lot of times you'll go to the tax records and those will be separated. So you have to make sure that you do your homework, your due diligence, to make sure that you get the accurate tax data for your asset, because sometimes it'll be aggregated by one building, and then another tax record will be another building, all in the same property, all the same, asset, but it's just aggregated by one building.
So true. And if you're looking for 50 units and up, don't give up on the building or the complex that has 100 units, but it's 5 buildings, 20 per.
Right. Exactly.
So just to back up for a second, you're going to click on import. Then I chose the file to import, and I'm going to grab it from here, 2 to 70 units. But guess what? I'm going to have to close it first. So I'm not going to let it yell at me. I'm just going to do that here. And boom. So you load it up, and you have to have address, and you have to have some sort of a label to make it interesting.
Yep.
So that was the address, and here's the label. So since I don't have units, I'm going to do beds and baths.
And you can infer a lot of that from except for the one that has all 3 twos. You can infer a lot of the type that you're going to have, the unit mix that you'll have. If you only have 10 units in there, you can probably reasonably guess it's not going to be all 3 twos majority of the time. You have to do some extra digging, but you can kind of use your mind a little bit to figure some of this stuff out.
Yeah, exactly. So I'm taking a look at this one right on the shores of Lake Apopka, 26 beds, 17 baths. So I think this is just a great way to get started. And let me see if I can just zoom right in here to the central business district. So there's no multifamily 1 out there. Okay. That's a different designation. So it doesn't mean that there are no apartments out here. If you really wanted to hit Orlando hard, you need to decide what designation you're most interested in.
Right.
And then you'd have to make about 5 of these maps. But as you see, it's not terribly much work. And I would say it's a lot more work to try just the intuitive approach.
Exactly. I agree with you.
If you're going to just drive the area to understand what it looks like, if you're just going to talk to people in the area, forget it. I would rather spend a few hours like this, and then I know exactly where I want to drive.
Yeah, there's a lot of value there. I think that there's a you can learn about where people like from an investing perspective, where you want to be by your customer and your population opinion. But this right here is so valuable to understand the market from a data-based focus and understand exactly, that the criteria that I want to have and where I want to have it at.
Yep. So well said. Well, what do you think, Tony? I think that we've gone about 45 minutes. I feel like I might have to split this in 2 for 2 reasons, not only just because I don't know if the ordinary attention span in America anymore is 45 minutes, but also because next week, just in case I'm not able to stop traveling for a little bit and meet with you, then we'd have something to release on schedule.
Absolutely. Absolutely. I think that's a good idea. Split this in 2. And then that kind of gives us 2 weeks to kind of get our next topic up for discussion.
All right. Awesome. Well, thank you so much, Tony. Like you said, next week or maybe 2 weeks from now, we have a lot of color we can still add. And as far as the technology, I know I could go a lot deeper in that. I feel like I could talk another 45 minutes about methods that I've learned from others, as well as methods that I have added or extended myself. And I was thinking, gosh, I wonder what our topic should be. I mean, do you want to just go deeper into this? Or I know that there's something that just occurred to me, and I wanted to do that live on the air. But again, I know that we're 2 that have looked really deeply into these markets, and I'm sure that we'll find a lot of great things to say.
I think a lot of it we need to, just ask what is it that people are interested in as well. When we put it out there, ask them what is it that you want to know. Is there a topic that you're looking that sparks your interest? We can definitely look at from an education base. I know that one statistic that I know my great friend Dustin Hendrickson uses all the time. When he's looking for an investment property, either to build or acquire, one of the first things he looks at is the education around it. So, the types of schools, because families want to be near good schools. So that's just another thing that we can talk about, and how to identify what those good schools are based on the data.
Exactly. And then how much to weigh that? I mean, I know that he is a developer, and so a lot of his stuff is going to be newer. Sometimes I think when it's a C class, that matters a little less, but I still definitely do look at the schools. And then you have a question of how heavily you're repositioning it. Are you going more towards the B, or is it more of a lighter reposition? And it's going to stay a C, but it's going to be a fair bit cleaner and hopefully appeal to a higher end tenant. So love it. So it looks like we'll just dig deeper into our 2 favorite cities a couple weeks from now. Sounds
absolutely. Sounds like a plan, George. Thanks for having me, man. Excited for the next one.
All right. Thanks.